Assalamu alaikum, this is Fahad again with a video, and this time the video is all about monetary policy. Last time we have discussed about the fiscal policy, and today we will be discussing about the monetary policy. If you haven't subscribed so far, so do subscribe to the channel and share this video with those who are studying O-levels economics and are about to appear in the November session or in the June session. So stay tuned with me. If there is any question, you could ask me. So let's start with that. There is a strong link of fiscal policy and monetary policy, and the reason why they both are used is to influence the demand, which is the aggregate demand. So in order to just give you a brief overview of aggregate demand, what it is, remember this thing, we have done the demand chapter, and demand means the individual demand. But if you talk about the aggregate demand, so then it means that it is the demand of the whole country. Okay, it is the demand of the whole country, and if we are talking about the whole country, so it is in economics we could say this thing that it is macroeconomics. Okay, so it is macroeconomics which takes the country as a whole, any decision which influences the country as a whole, which affects the country as a whole, will be catered under the category of macroeconomics. So there are certain remedies, certain things, if you do anything in the macroeconomics activities, so it will affect the whole country. If I give you an example for that, so the basic example for that would be taxes, the basic example for that would be subsidies. These all things just give an impact to the whole country, and again there's a trickle down effect in that one industry is being affected positively or negatively, then the other industry will affect too. So this is very important in the lectures of economics this time. So let's move forward. In the macroeconomics, we are about to discuss about the monetary policy. In the last lecture, we have talked about the fiscal policy. If you haven't watched that lecture, do watch that lecture again and just grip your knowledge about the fiscal policy again. Monetary policy. If you talk about monetary policy, the major roles of monetary policy is to control the money supply. Okay, it is to control the money supply. Second role is to control the interest rates, and the third one, which is not the least again, but this is a role which is to control the exchange rate. Okay, and again I'll be telling you the perspective of Pakistan too, because there are certain things which are happening in Pakistan, and we are not able to connect every detail of economics with the whole world, but in Pakistan there is a lot of things happening at the same time, so we have to just connect this lecture with that. So money supply, what do I mean by money supply? Changing the money supply, and when I use the word changing, it means either increasing or decreasing, either increasing or decreasing. Okay, this is very important. We need to just understand this thing. Now, the second thing which is very important is that the interest rates, either increasing or decreasing. So maybe you increase the interest rate or you decrease the interest rate. It's up to you. It all depends how the government wants to do that. Okay, or decreasing. And the last one is again the same thing, that the exchange rate could either be increasing or it could be decreasing, for the either increase or decrease. Okay, so again I'll just correct the earlier one. It's not decreasing. Again I'll be writing down decrease. This was the error of English, not the error of economics. So let's talk about that. If aggregate demand is more, so what happens if aggregate demand is high? So what do I mean by this? Aggregate demand is high. It means that people are consuming more. People have more money, consuming more, and they have more money. Why I'm teaching you like this? The reason is that because you have to connect, you have to do the analysis part in economics. When you have to do the analysis part in economics, so you have to just connect things very well, and you get the marks for analysis. So this analysis will take you to the level 2 answer, and afterwards you have application and evaluation 2. These are the basic skills which are required. So consuming more means that you have more money, and when you have more money, again sticking to the concept of scarcity or the concept of basic economic problem, we know this thing very well, that we don't have all of the things. We cannot produce, we cannot consume all the things at the same time. This was chapter number 1. If you haven't studied this chapter, you could just go through my channel and just go through this video, the basic economic problem. We couldn't buy everything we have. So what happens when everyone chases the same goods? So what happens? The supplier is observing an increased demand, and in the demand and supply chapter, we have learned this thing, that when something is in a scarcity, so what happens? We increase the price. Okay, so the price of the goods increases, and ultimately the inflation rate increases. Again, we haven't done the chapter of inflation, but when we will start this chapter of inflation, I'll just tell you further more about these things. So let me just sum up all the things. If the aggregate demand is high, so there is more consumption because of more money being held by people. And we just know the concept of scarcity, basic economic problem, which says that you have to choose between things. You cannot opt for everything. So you have to chase more money chasing less goods. So again, ultimately the producer increases the price, because the producer observes this thing, that when things are becoming more expensive in the market, so now there are less people who will be able to afford it, because the things are in scarce in real. So what happens, the producer tries its level best to increase the price, and ultimately the price is increased and we experience the inflation. The inflation rate becomes higher. One of the major reasons for inflation is that the aggregate demand is high, just because people have more money. So again, if the government wants to correct this, so the government can either use the fiscal policy, or it can use monetary policy, or it can use both policies at the same time. Every year, the fiscal policy and the monetary policy is announced by the governments. It all depends on the country's policies, the constitution, and other things. So, if we talk about aggregate demand is too high, so what the government needs to do, if the government wants to correct inflation, so aggregate demand needs to be reduced. And when we are saying that the aggregate demand needs to be reduced, so we will use the word contractionary policy. What do we use? Use the word contractionary monetary policy. The government aims to reduce the consumption of people, and when they want to reduce the consumption of people, we will say this thing, that contractionary monetary policy will be used. And contractionary monetary policy means we need to reduce the amount of money people have in their pocket. Reduce the amount of money. The first thing which is under the monetary supply is the money supply. So let's talk about the money supply, how it could be reduced. The money supply could be reduced by less printing of notes. Okay, less printing of notes. This is the way people would have less amounts in their hand. So this is one thing we will do. Second thing, if you want people to spend less in the market, so what we'll do, we'll make the interest rates higher. Okay, interest rates higher. So you know this thing very well, that when the interest rates are increased, so again in the end, people are not able to buy more, because things have become cheap, things have become expensive, sorry, not cheaper, things have become expensive, and have become expensive, so they will not be able to purchase anything in the market. So again, they will also prefer to save more. When interest rates are higher, saving is more and borrowing is less, because people have to pay more amount of interest on the borrowing. So this is discouraged in this way. The third thing is that the exchange rate. The exchange rate of the country needs to be decreased. Okay, it needs to be decreased. So when it is decreased, so again, when our exchange rate is increased, let's suppose if I'm talking about PKR, Pakistani rupees, if it is decreased, so it means the US dollar is increased. So it means less rupees can purchase US dollar. So again, ultimately the goods will become expensive and people will buy less. So this is how the cycle goes on. But majority of times, many of the books will talk about this and this. There is less focus on exchange rates, but again, it is a part of monetary policy. Vice versa. If I'm talking about money supply, if we are printing more notes, so what happens? When we are printing more currency, coins and these things, so what happens? There is less valuation of the currency. If I give you an example of this, a 10 rupees note or a 10 rupees currency, which used to buy more things, let's suppose in 2005, would be giving you less things in 2010, just because of the inflation factor. So we need to understand this thing. So inflation factor contributes very well. So let's suppose if there is less aggregate demand and there is less activity, again the government wants to increase the aggregate demand because there are certain benefits too. If I tell you the benefits over here, so I'll be saying this thing. If we want to increase the aggregate demand, when the demand increases, so what happens? There is increased employment, and when there is increased employment, so what happens? The crime rates decrease. Crime rates decrease. The standard of living increases, and these are a lot of factors, these are a lot of benefits we receive after just going for the aggregate demand increase. So how the aggregate demand will be increased? First thing, money supply. Again, what should be done with the money supply? The money supply should be increased so that people would have more amount of money. Okay, people will be able to hold more amount of money, and again if they have more amount of money they will be able to spend more in the market. Second is interest rates. So what should be done with the interest rates? The interest rate lower should be lowered down, so that people should find taking more more loans from the market, because it is cheaper now. Taking more loans is cheaper, and again ultimately what will happen, people will take more loans because now they have to pay less interest rates. Secondly, they will save less. Again, in the topic of savings, borrowings and households, we learned this thing, that when there is a decrease in interest rates, so people will save less, just because it's not attractive for people to save more in the market. So again, they will not be saving more, and ultimately they will be spending more in the markets. But again, there should be a balance. And the last thing is exchange rate. Exchange rate needs to be decreased. So when the exchange rate needs to be decreased, sorry, it needs to be increased, because they will be able to import more. Import, again, it could be the import of raw materials. Maybe people are importing more raw materials so that they could produce more and make a better finished product in the market. But again, there are people who will say this thing, that if uh, something is priced high, so that particular thing is of good quality, but that doesn't mean that it is of good quality. There are certain tariffs, there are certain taxes applied by the government, so that's why the product becomes expensive. Many of us just think about this thing, that if something is expensive, then that thing would have high quality. We have attached the quality with the price. If the price is higher, then the quality is higher, but in reality it is not true, because many of the countries, they just import the products. In the end, they just put the taxes on that and they make it expensive. Otherwise, the product which is there in the market was not expensive earlier. So this is what which is very misleading for the people. So we need to understand this thing. So these are three things which are very important, which needs to be done. When there is a question on this thing, we need to write it down, all the factors, and again there will be a case study, and we need to develop certain factors. If we talk about the interest rates, so we could just talk about the households, consumption and savings part, that the chapter which you have learned already. If you haven't watched the video of that, you could go into my channel and just search for that. We have to talk about the money supply. We'll go into the chapter of inflation, where the equation of money supply is given. We need to talk about that. Exchange rate, we need to talk about that what happens when the exchange rate decreases or increases. So when we elaborate these things, when we explain further about these things, so again we'll observe this thing, that there will be more marks available for the analysis part, and that's good for the business. So just remember this thing very well and just write it down, and good luck for your examination. If there is any question in the end, you could ask me. And if there is anything you feel doubtful about, you could ask me over here. You need to just like my Facebook page, and which is with Fahad Ali. And if you want to connect yourself with me on Instagram, so you could just go at fahad.ali175. I suggest you to subscribe this channel. If you think this video helped you a lot in preparing for the topic, like this video, comment below if you need anything, and share this with your friends. So I'll take your leave today, and I'll be meeting you again in the next video. Goodbye.